Welcome to ASM Connected, the podcast brought to you from ASM Technologies. In this episode, ASM Technologies' Iain Tomkinson and Stephen Dale are joined by Brett King, a world-renowned futurist and speaker, an international best-selling author, and a media personality who covers the future of business. Brett has spoken in over 50 countries in recent years, at TED conferences, given opening keynotes for Wired, The Economist, CES and more. He even advised the Obama administration on Fintech policy and advises regulators and banks around the world on technology transformation. In conversation, Brett discusses agility, technology and innovation in the finance sector, how we'll interact with technology in the future for different services, the impact of digital transactions globally, and how the finance sector needs to adapt and improve its use of technology in the future. All of that's coming up. This is ASM Connected.
So, welcome back to the ASM Connected podcast. I'm Stephen Dale, joined as usual by my colleague Iain Tomkinson. And today I'm really pleased to introduce our guest, Brett King. Brett is an author, a Fintech Hall of Famer, radio host, international speaker, and futurist. Just to start us off really, Brett, I'd like to ask you, from a technology perspective, what does innovation mean to you? How do you define it?
I think one of the really interesting ways to view technology and its role in the world, and this also ties into the whole futurist thing, is being a good futurist, you have to really study the past. You have to understand human behavior and what has gone before. And, what we learn is that over the last 250 years, there's not a single industry that hasn't been transformed by technology. And the number of industries that have successfully defended their traditional business models against innovation is exactly zero. The thing that sort of amuses me, or the thing that I can't quite wrap my head around as a innovator, as a technologist, as a futurist, is why do we resist technology's advance? Whenever you have an innovation hitting a new industry, like we see fintech disrupting financial services right now, you will always get the incumbents who argue it's never going to work. People want to see a person to get a bank account, and they'll defend it with their dying breath, when from a precedent perspective, there's absolutely zero evidence to support the assertion that this industry is going to be unaffected by technology. And so we need to spend a lot more time planning how innovation should impact the world, rather than arguing if it's going to change the world. And I think that's the main message that I've been trying to articulate really the last 10 years or so.
No, I like it. It's erring on that optimistic side of a definition of innovation, and embrace it, ride the wave, go with the flow. So I know Iain's been reading your books. I know he's keen to sort of get some questions in.
Yeah, I like to do my research, and fascinating. I read your book, Augmented. One of the things that I picked up on and I thought about a lot, the way that smartphones and consumers use smartphones to access things. And you said at the time that was in its infancy. That was quite a bold statement even then, and to say that it was in its infancy. How far have we come since then, and how far can we go with that smartphone connection?
Well, I think you have to look at it as sort of the evolution of computing infused into our world. The smartphones did some interesting things. First of all, compared with a mouse and a keyboard, a smartphone was both easier and harder to use. You have a situation where you can, navigate with a multi-touch screen, but the keyboard accuracy was nowhere near the accuracy of a QWERTY keyboard. But then what we have is the emergence of voice and gestures and other ways of interfacing with the computer that have emerged. And so we use facial recognition to secure our phones, as an example. So looking at it in the cycle of technology, the smartphone was really important because it made the computing device that we use every day very human, highly usable, and put it in context where we could use it when and where we were going about our daily lives, sitting on a train or as a passenger in a car or walking along the street. But you follow that trajectory on, and then we can talk to computers, they can recognize us, they can anticipate our needs. Computing just becomes like electricity built into the world around us. And so that's really the trend. And if you think about during the pandemic, our reliance on apps for grocery delivery and for restaurant delivery and so forth, that's all just part of the digital services layer in the world around us that adapts to the use of ubiquitous technology. So if you want to look at what makes 21st century economies versus 19th and 20th century economies different, is that dominantly the day-to-day services we will use, whether it's banking, healthcare, education, food and groceries, etc., will be delivered through a digital services layer. That is, whether it's asking your voice-activated speaker for a service, or whether it's interacting with your smart glasses or smartphone or whatever the device is. To have access to medical services in the future, you'll need a digital identity, you'll pay digitally, you'll access medicine through telemedicine. All of the services of the 21st century would be sort of part of this digital infrastructure. And so the smartphone is part of the transition to that world.
I saw one of your speaking sessions, and you were saying that you'll be able to walk into a car showroom with your smart glasses on, and you'll be able to look at it, and basically your finance company will tell you that you've been looking at it and if you can afford it or not, and if you'll be able to pay your mortgage if you do buy it, which is quite scary stuff, really.
Some people look at it as scary. I look at it as it's the application of data that's already out there, but to you individually in terms of your behavior or your needs or the world that you have. And ultimately, right now what we have is we have a bunch of services with some personalization, but in the future, the way artificial intelligence will work is sort of really trying to optimize your day, optimize your behavior and your experience at all times. So, for example, credit cards won't exist in the future because if you need credit, it will be provided based on the context of the problem you face. So let's say you walk into a grocery store and you don't have enough money to buy your groceries. Now, at the time you walk in the grocery store, you may be completely unaware of this, because it may be that your salary hasn't hit your account yet. You've expected it to and it hasn't. It may be that your mortgage payment came out and you forgot that the mortgage payment was going to go out. So here you are in the grocery store stacking up the groceries, and what happens? You get to the checkout and your transactions declined. I'd like to avoid that embarrassment. So imagine if you walk in the grocery store and your smartphone gives you a message and says, hey, it looks like your salary hasn't hit the account yet. Looks like you don't have enough money for your groceries, because when you're in, Sainsbury's, or Tesco, you normally spend, £250 and you've only got £100 in your account today. Here's an extra £150 to complete your grocery shopping. The fee for that is £2.50. Would you like to proceed? And that's a great option. It's a much better option than me getting to the checkout and having my card declined and, having to sort of fish for another payment solution. And so we're within reach of that sort of capability right now. And also, more than that, coaching you on how to use your money, where you can go grocery shopping to save a few dollars, what's the right time of the week or the time of the day to buy stuff. We're within grasp of that sort of level of improvement in quality of life around things like financial transactions, but also for things like medical advice. So instead of waiting for you to get sick and go to the doctors, do that sort of preventative maintenance of your health, and it may know when you're sick even before you do.
There's some really exciting applications of the new technology there, and the example that you've given about walking into the shop and being presented with that data. What I like about that is it's not a massive step change, is it? It's not something almost beyond the realms of our imaginations, because like you said, that information's already there. It's just presenting itself and bringing it in at the right time. So when I'm thinking about the pace of innovation and how this technology emerges, what might hold it back and slow it down? And particularly in the finance sector, obviously we know it's a highly regulated industry. We don't want to sort of depress everyone with compliance and everything else. But I'm interested in knowing whether that constraint of regulation, does that hold things back? Does it constrain that innovation, or actually does it drive us on to find ways around it?
Well, in most cases, it holds us back. So, for example, where I am here in the United States, roughly 20% of US households are unbanked. That is, they have to rely on cash and checks and check cashing services and things like that because they don't have access to a traditional day-to-day bank account. Now, in 1977, the United States recognized the problem of financial inclusion, and so they put a law in place which says that if you're the last bank in a city or a town, you can't close your bank branch because the bank is a vital point of access for financial inclusion. That has turned into now a law that means that if you're a bank and you're trying to start a bank, invariably you're going to have to build bank branches because you have to comply with the CRA. But we know today that the mobile phone, as an example, has financially included over 1 billion people that didn't have access to banking beforehand through mobile wallets, mostly in countries like Kenya with M-Pesa and Paytm in India and so forth. So we know that the mobile phone is a far better device to create financial inclusion than the branch was, and yet changing that law in the United States has become extremely problematic. And so, you've got this situation where from a regulatory perspective, we have a tool that would dramatically improve financial inclusion in the United States. And yet the current regulations, essentially exclude a smartphone as a device that is capable of doing that. That's just one illustration. But, for example, we have a lot of big tech players now that are entering the financial services domain, such as organizations like Alipay or Tencent WeChat Pay out of China. Most people probably don't realize that just those two mobile wallets that emerged out of China but are now available in about 150 countries, those mobile wallets did twice the volume of payments last year in 2020 than all of the plastic cards in all of the world combined. And so from a regulatory perspective, the number one day-to-day banking artifact is a mobile wallet. And yet in many parts of the world, you can't use those wallets unless there's a bank that's connected behind it. Whereas in China, when these mobile wallets started, and now they're facing greater regulation, but they were just technology companies that would allow you to use these mobile wallets to pay. And so in answer to your question, regulation tends to slow innovation until we see a precedent in some other market or something sort of breaks away in terms of innovation that isn't compliant. And then the regulators have to make a decision. Do they make that illegal and stop it? Or is it of broad benefit to the community? And so do they change regulations to allow it? And so in the case of M-Pesa in Kenya, for example, that's what happened. It was an experiment. It broke out into something that now 98% of the Kenyan population use. And so the governor of the central bank in Kenya, to his credit, said, this is good for Kenya and good for financial inclusion, and let's allow it, and let's give M-Pesa a type of banking license that allows them to take deposit, but doesn't need them to be a bank.
I love hearing those stories about the sort of emerging developing countries that have not taken that linear approach. And I think moving forward in the natural steps, or even trying to play catch up through those natural steps, is going to be difficult. But what I like is the way that they've made that step change and missed out entire generations and eras of banking and just hit that fast forward button. So I think that's a great example for other parts of the world to learn from, really.
Yeah, and just I suppose adding to the future of finance, we all know that AI is already a big player in finance, and things like genetics, machine learning, and probably robots are all part of the future of finance. I suppose the question that I was going to is, how open is the finance sector? Are they able to push those technologies on, and how receptive are they, perhaps compared with other sectors such as medical, which you've already touched on?
It depends on the technology, and it depends on the organization in many respects. Blockchain, as an example, is a technology that shows real promise in terms of payments and identity infrastructure, for example. It's been used quite broadly in China as part of the banking system, but there's really nowhere else that blockchain has had that sort of take up and adoption. In terms of artificial intelligence, There are areas where AI is already extremely useful, such as fraud detection in the United States. But in terms of using it more broadly for simple things like helping consumers improve their financial health, we've seen a reluctance on that side of it. We also, have had issues with machine learning models, using existing policy and existing process that has embedded bias in it, and so there's things that need to be addressed. Having said that, whether the industry is open to it or not, I don't think it's going to change the outcome at all. I think artificial intelligence is going to be part of the future. And so, again, I come back to that central premise is, we should be looking at how to introduce artificial intelligence more effectively into society. And I think, we'd be better off experimenting with it or regulating it in a way that makes sense. For example, creating some ethical standards by which AI should be implemented at a corporate level, or, in respect to your finances or banking, as an example. That would be more useful as a way to sort of roll this stuff out than, sort of the fits and starts with which we have today. But look, I think the big shift probably will be what we call robotic process automation, where, if you can teach a human to follow a checklist, then we can use artificial intelligence to do that same thing. And so approving a loan or a mortgage or a credit facility, typically that has had a credit risk process associated where a human has had to tick off the boxes before you get a loan. That can be automated. Trading is largely automated now. There's large portions of the banking space that will be just automated through the use of AI. In fact, about 40 to 50% of jobs in banks as they are today will disappear as a result of that level of automation. So that's the big issue. How are we going to respond to banks that are essentially black boxes with some inputs that don't have a lot of humans in them, and the fact that we are going to see many people laid off as a result of automation, or we're going to have to find ways to retrain them into new careers that sort of fit the bill from a technology perspective. So it's going to be pretty disruptive.
And I suppose our audience, a lot of the large IT systems integrators, resellers who are selling into the financial sector, they'll be, I suppose, looking to have meaningful conversations with their customers. If you were in front of the customer, what kind of conversations would you be having with the banks in terms of, what the next thing is that they should be looking at?
One area that we need to solve for the 21st century, and we're seeing it right now with the pandemic, is, better identity infrastructure. And banks have an enormous and a natural role to play in this. They could be part of trusted identity networks that are used. Because, if you think about how you apply for a bank account today, you go in, you have to, what's your mother's maiden name, what's your address, your date of birth, 5 years ago, where was your residence? We use this type of data to secure or to identify someone these days. But that data is no longer securable. Going into a bank and filling out an application form, you do so understanding that that bank doesn't have adequate security to protect your bank account today, because those pieces of identity information that we put on an application form can easily be uncovered in today's world. So we need better identity. We need biometrics. We need behavior, like heuristics, and so forth. And to illustrate this, I talked about before Alipay and Tencent WeChat Pay. So Alipay supports Alibaba's Singles Day in China, November the 11th last year. They did billions of dollars of trade in a single day. At peak, they were processing 460,000 transactions per second. Now, that's huge. I mean, Visa's global network can process at peak about 32,000 transactions per second. So we're talking about 10 times the volume of Visa's network at peak. And yet their fraud rates, because of the use of biometrics, including facial recognition, was just 0.0006 basis points of fraud. But if you live in the UK or the United States and you use your credit card online, card not present transactions have a rate of 11.2 basis points of fraud. So 10,000 times what Alipay's network has. Now, I understand that people have concerns about facial recognition and civil liberties, but I think people should also be fundamentally aware that if they're not choosing these technologies, if we're not integrating these technologies, then we're accepting far, far higher rates of identity theft and fraud online than we have to. And so I would be saying to banks, how are you going to make banking safer for your customers? Number one. Secondly, coming off the back of the pandemic, a lot of people have economic stress and economic uncertainty because of the economic effects of the pandemic. So what are you going to do over the next few years with the technology you have to help people save more money and, get financially healthier again? I'd probably start with those two.
Okay, great. No, and that sort of privacy with the facial recognition, I suppose that's the case of if you give a bit more data, you actually protect your own data scenario, isn't it?
Yeah, absolutely. And we use it coming into borders. In the UK, if you come into Heathrow and you're a UK citizen, you're most likely going to use facial recognition to enter the country through a turnstile that has facial recognition equipped. So we use this technology every day. And, I don't think we need to be afraid of it. I think what we need to do is just be more transparent and educate the public about the fact that the rewards for using this technology are far greater than the risks of using this technology in terms of abuse.
I think there's some fantastic takeaways there, Brett, that's really going to help our listeners. One thing I'm interested in, and as much as we would love to talk about this all day, I think one way that we can keep abreast of this conversation and further developments is obviously to follow your new book, which I know is coming out soon. And what I find interesting in the conversations we've been having on the podcast, this series about technology, innovation, emerging technology, they've very often taken an angle that was almost unexpected when we start talking about social aspects and philosophy and ethics. It's not necessarily where we mean to take it, but it's where it keeps going. So keen to sort of understand a little bit more about the book you've got coming out and what we're going to be able to learn from that, because it seems to be edging in that direction as well.
Yeah, well, in terms of the new book, the new book sort of emerged out of many discussions and debates, but really about coming off the back of the pandemic and also understanding that we have the greatest inequality that the world has seen, at least since the Middle Ages, if not worse today, in countries like the United States and Britain and Australia, where I'm from. Growing inequality, growing economic uncertainty, and then we're about to throw artificial intelligence into the mix, which is going to change, employment patterns. And we've got climate change emerging. And so the potential for greater inequality and greater economic uncertainty over the next 20, 30 years is the greatest collection of crises that humanity is likely to face. And so, really the book was about, do we have the tools in the current system to solve these problems, or do we need to think differently about the way humanity should, proceed? And that's really what the book does. It debates the different ways of governing and the different forms of economics that we would have traditionally applied, and plays those out over the next 30 to 50 years, and it says, all right, if we keep capitalism as it is and we keep the way governance as it is, will this result in solutions to these problems? And the answer to that is no, right? So how do we have an optimal form of humanity? How do we organize as a human species to give every human the best chance possible to create, sustainable prosperity for the planet, living in harmony with the planet and so forth? And that's sort of really what we tried to tackle in the book. And we looked at two major axes in terms of the way we plotted these futures. One was inequality versus inclusion, so exclusionary policies and economies versus inclusive. And then we looked at planned versus chaotic futures. And so where we really commit to planning through these futures that we have, or where we just let it happen and let's see if the free market develops a solution for it. And so we came up with 4 different options in terms of the future. And there was only one that was optimal, which was a highly planned, highly technology driven future. All of the rest resulted in far greater deaths and far greater issues with poverty and exclusion than they have to. And now I know some people are going to debate this, but that is exactly what the book is designed to do. Let's have a grown-up conversation about how humanity needs to behave in respect to, everyone else that's on the planet, including the other species that live on the planet with us.
I completely agree. And that's a great vision for the future. Couple of wind down questions just to sort of take us through to the end. And first one, really probably a simple question. I know most people have a favorite tech gadget. What's yours?
Well, I've got a couple of smartphones. I use them obviously daily, multiple times. I probably use my iPhone more than I do my Samsung Galaxy. But I'm also a gamer. And so, my gaming devices, probably the one I use the most right now is my PC. But I'm also, a fan of the Oculus VR headset. There's some pretty incredible VR improvements being made right now. And, sort of gaming devices is sort of how I unwind personally.
And finally, have you got a favourite sport, or do you play sport, or?
Well, it's difficult being an Aussie offshore in that, supporting my home Aussie rules football team, there's not much chance to sort of do that. There'll be a bit of a gathering at some of the Australian pubs around New York, and there's 2 or 3 of them where you'll get together for the grand final. I do follow the recent tests in the UK, the cricket tests, and have tended to be a bit of a fan of the cricket. I like the 2020 format and stuff that has emerged over the last few years. But my mum was from Birmingham, and my grandfather was a Man U supporter. So if you're asking about the Premier League, I'd have to say that I still sort of identify with Man U, even though it's rare that I get to see the matches in the UK. But if you're asking by Aussie rules team, it'd be Collingwood. I don't know if you heard of them.
I haven't, no, and I have seen some Aussie rules, and even though I also like the rugby, watching Aussie rules is just, I just think, wow.
It's a really interesting game. It's quite an interesting spectacle, but if you ever get the chance to see a match in Australia, I would strongly suggest you avail yourself of it.
Absolutely. Great. Well, it's been fantastic to have you as our guest today. Some really insightful information there for our audience. Thank you very much for the time you took today. Steve, have you got anything to add?
No, just really enjoyed it. Look forward to the book coming out. And one of my favourite things that you've talked about here is it sounds as if the future of the leisure society is still on the cards. So, I'm willing that comes.
Oh, definitely. Yeah, experience-based economies. If you think about that, if you've got a lot more time on your hands and so forth, the whole experience-based economies, adventure-based travel, immersive stuff, it's all going to be big. But if your listeners are interested in the book, they can go to www.riseoftechnosocialism.com, and they can check out the trailer for the book, the video trailer for the book, and it links to pre-orders in the UK. You can go to obviously Amazon in the UK and bookdepository.co.uk to pre-order as well.
Great. We'll get our copy on order. Thanks for your time, Brett. Much appreciated, and you take care.
Thanks, guys.
Thanks for listening to this episode of ASM Connected, the podcast from ASM Technologies with guest Brett King. If you want to find out more about ASM Technologies or anything discussed in this episode, visit asmtech.com. And if you've enjoyed this episode, subscribe now and never miss an update. Thanks for listening to ASM Connected.